After 2 months of stagnation, the UK economy returns to growth. Welcome to Market Insight, I'm Ramzan Karamali. Well, the UK economy grew 0.2% in monthly terms in August. That was in line with expectations. So, is Britain's economy now on track to grow for the rest of 2024? And will this data make life easier for new Finance Minister Rachel Reeves, as she prepares to deliver her first budget later this month? Well, to help answer that and more, I'm joined by James Smith, Developed Market Economist at ING. James, thanks so much for joining us. So the growth in August doesn't sound that impressive, just 0.2%, but there was expansion in services, manufacturing and construction. So do you think we'll get more economic growth for the rest of 2024 and avoid another technical recession?
I think so. And actually, we've been seeing a lot better news on growth so far this year. The UK has actually been one of the outperformers for once when it comes to economic activity. We saw in the region of 1.5% growth through the first half of this year, which for an economy like the UK is very respectable. Now, those growth rates are unlikely to last. And in fact, if we look at the last sort of three readings, yes, as you say, we saw some growth in August, but a couple of months before, we're pretty much flat on GDP. So we're seeing a bit of a slowing, but nevertheless, these are pretty respectable growth rates of 0.2, 0.3% quarter on quarter. So yeah, to answer your question, more growth to come this year.
And it's less than 3 weeks before the new government's first budget. The new finance minister will have to try to lift economic growth, but at the same time, try and fix public finances. Do you think she'll be able to do it?
Well, it's an unenviable task, clearly. And I think when we're focusing on these GDP figures, yes, the UK economy has grown more than expected through the first half of this year. But I don't think the Office for Budget Responsibility, that's like the policeman for the budget, if you like, I don't think they'll be revising up their forecasts much further. They're already, if anything, a bit too optimistic on growth. So, in other words, don't expect that better growth to translate into more fiscal headroom for the Chancellor. It looks like she is going to reshape some of the fiscal rules, these like goalposts of what she can do with the with the budget. That might unlock more money, particularly for investment. That's really the thing markets are looking at right now. So maybe a bit more investment, but the crux of the issue is still how do you increase day-to-day spending without massively ramping up taxation? It's going to be a difficult one.
Now, if GDP does fall below the Bank of England's own forecast, do you think that could impact the central bank's easing path?
I don't think it has a huge bearing. I mean, the Bank of England, they had the opportunity back in August to revise up their growth forecasts on the basis of what we'd seen through the first half of the year. They didn't really choose to do so. And I think that's been vindicated by some of the latest numbers we've seen. I think it's much more about inflation, particularly services inflation and what that does through the rest of this year. And I think if that is better behaved, we could see faster rate cuts from November.
Well, next week we do get inflation data and also jobs data out of the UK. What should we look out for?
Yeah, as I say, the main thing is service sector inflation. It's currently very sticky. It's higher than in the US or the Eurozone, up at 5.6%. It looks like it's going to dip back towards 5.2%. We think it has been bouncing around a little bit. But the key thing is that is below the Bank of England's most recent forecast. And I think that undershooting of those forecasts will continue as the year goes on. I think we're also watching the jobs numbers for any hint that the employment side is continuing to worsen. The data quality is a bit poor at the moment, so we can't say anything too conclusive. But I think in general, the sort of data we should see should push the Bank of England, not just to a cut in November, but we think also sequential, faster cuts thereafter.
Well, one bank that has got a decision to make is the ECB next week. What are you expecting there?
Well, we're expecting a rate cut, which wasn't really what us or indeed many other people were expecting just a few weeks ago. It looked like the ECB was happy with this sort of quarterly pace of 25 basis point rate cuts. But it looks like the ECB is becoming more and more aware of the risks to growth. Inflation looks like it's under control. Some of the purchasing managers indices have been looking a little bit more worrisome. So it looks like we're going to see a speeding up of that rate cut cycle.
James Smith from ING, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.